Hi, my name is Bruce Roth, and today my guest is Dave Horwedel. Dave is an enrolled agent and the founder of Torchlight Tax. Dave, the question I'd like to ask you today is, do you have any specific tips that might apply especially to them?
Yes. First of all, I've been using Uber and Lyft a lot just because they're very convenient transportation-wise. I find their service very, very good. And every time I get into a car with an Uber driver and they find out I'm doing taxes, they ask me questions. So I thought I would go ahead and do a video and put some data out there. The first thing as an Uber driver or a Lyft driver is your most major deduction is likely to be your mileage. You can deduct 57.5 cents for every mile that you drive on business. If you do 10,000 miles a year, that'd be $57.50, $5,750. Now usually you might do 5 times that much. You might do a lot more if you're a full-time driver. That's a very major tax deduction. It's probably a lot more than what you pay for gas and so on. Now you can take gas and receipts and your expenses, or you can take mileage. You can't take both. In most cases, you're going to want to take the mileage because it's going to be a lot more.
And it's easier to track as well.
It's much
you
easier to track.
Write it down in the morning when you start and in the afternoon when you stop.
Right. Right. And you want to keep track of your business miles and versus your personal miles. Now remember, your business miles it's not just when you're driving a client around, it also includes when you're going from one location to another because there are more clients in one area, or you're going to pick them up. Well, that's business miles because you have to drive that in the business.
Right. Are there any other specific tax breaks that would apply to Uber and Lyft drivers?
Well, in many cases, it would be wise for an Uber and Lyft driver to incorporate. They can save money on their self-employment tax, which is 15.3% right now, by incorporating. They can save a lot of that. This is discussed in another video, but it definitely bears mention here. And the other thing about incorporating is that you're driving your car around, and sometimes if you do get in an accident and somebody is suing you, you're probably going to be pretty happy to be incorporated because they wind up suing the corporation, and they can't go through the corporation after your personal assets, and that could sort of protect you.
So they can't take your house or your wife's salary or anything like that.
Right. I mean, that's correct. By incorporating, you have like a corporate shield.
Great. Thank you so much.
Okay.
And thank you for watching.